Alrighty, guys, so it's about 2:15 p.m. on the East Coast right now, and the Fed minutes just came out, which is completely turning around the stock market right now. You guys can see the markets were really red earlier in the day, but now we're still red. I mean, don't get it twisted. We're still red, but now the S&P is only down 0.3%, the Nasdaq's down 0.7%, Russell's still down 1.2%, but the Dow is only down 0.15%. So markets are turning around in a big way. We got to break them down in this video, and we also have to break down some stocks, earnings, what I'm doing. So sit back, relax, take a sip of your water or whatever else you guys got over there, wherever you guys are, and let me know in the comments where you're watching this video from. Actually, we haven't done that in a while. Yeah, let me know in the comments where you guys are watching this video from. And with that being said, let's dive into the video. So again, 2:15 p.m. on the East Coast, Fed minutes just came out, and we're not going to break them down in this video because, quite frankly, I haven't even dove into them myself quite yet, but I will later on. But I'm assuming whatever came out, the market's liking, right? Because we are now breaking out, and this breakout actually started before the Fed minutes were released. You know, this started coming out here, the breakout playing out rather, at about, when was that, 11:50 a.m.? So over 2 hours ago is when SPY bottomed at about 424.50, and during that same time period, Triple Q bottomed at about, 326.70, and now it's up over 330. It is up 1.3% from that point. So I think I mentioned this in my Patreon video this morning, that the setup I saw pre-market was looking a lot like what I saw on Monday. Do you guys see this? On Monday, we sold off pre-market, and I think that might have been from, the futures were red on Monday. That's right. Pre-market, we were selling off, and then we had a huge run-up throughout the day on Monday. That's kind of what we saw this morning. We were selling off all pre-market. We were still holding the uptrend as outlined here by these, circles, right? And now, I said in that video this morning that I was looking to see if we were to get some sort of run or some sort of, reversal like we saw on Monday today. And lo and behold, that's what we're seeing right now. I mean, we're still red overall. We're still pulling back overall. But the fact that we are here on the 5-day, 5-minute seeing a breakout above not only the 50, but also the 180, that's a good sign. This looks like bulls are gaining control again. And this might be going to 431.75, which was the high from, yesterday, right? And Triple Q could be going for something like, 334. If it clears above, I'd say 331, 331.50. It's already breaking above these moving averages, but I think it has a little bit more to go. So I'm going to set my alert 331. If these levels break, guys, bulls are going to be in full-on control yet again. And that sell-off we saw and the red we see right now, it could turn green quickly by the looks of it. But as of now, again, we are red, and I'd love to know your thoughts in the comments down below. Let me know your thoughts as always, guys. And let's do a quick update on oil. Where's that at today, guys? I haven't looked at it myself. Oil's up today. Look at that. Oil's up 2%, and we can see here on the 4-hour chart, we're at a big support, $88 a share. I've said this time and time again, and we did break under it. We got to about 86 or 85 recently, so we are clearly getting selling pressure, downwards pressure past the lows from the beginning of this month, which is not good at all. So by the looks of it, the bottom might drop at one point or at some point coming up here on crude oil, the way the technicals are forming. And by that, I mean, it's not going to go, it could, who knows, but I'm not saying it's going to go in the short term to 50. It might long term, who knows. But in the short term, I could say it goes to 80, 81, 82 a barrel. That would not surprise me at all if we were to get another leg down on crude oil. So, yeah, that's a little update on the markets, guys. And we're not going to mention or talk about crypto in this video, or not look at the charts, rather, but I will mention what these are trading at right now. So Bitcoin's down on the day, 23,500. All right, it failed at 25,000 yet again. And Ethereum is having some resistance. Seems like at about 19,200. Now it's at 1850, down about 2% on the day. So Bitcoin, Ethereum, they're red. Stock market's red. Oil's up, gold, silver, those are down. So pretty much everything is red. It is today's the day for energy pretty much. That's it. What else is up? Maybe healthcare? I don't know. Let me double check. Is AbbVie up on the day? No. Is J&J up on the day? Yes. Is United Health up? Yes. So, yeah, I mean, it's the day of energy, healthcare, financials potentially. Probably not. Nope. Yeah, financials are down. So it's a red day. It's a red day overall today, guys. And we had some earnings this morning that I want to talk about. Target reported 39 cents of EPS versus 73 estimated. So they missed by a long shot on EPS as revenue missed as well, actually. 26 billion versus 26.09 billion estimated. And if I tell you some of these other numbers, I mean, they're not bad, but they missed on same-store sales. They were up 2.6%. The estimate was 2.8%. All right. And we're getting more information that, the company now is reducing inventory exposure in discretionary categories while investing more rapidly in the growing categories, right? But in doing this and other things, of course, affecting this, gross margin is down wildly from last year. I mean, it's not a crazy drop to the point where it's like unimaginable, but it's a good chunk here, from 30.4% a year ago to now 21.4% or 21.5%. So it dropped 30% or whatever. I mean, that's a pretty big drop. And this is hurt from what I mentioned, trying to reduce excess inventory, the higher freight and transportation costs, of course. And right now, Target is also looking at, or actually they already did reaffirm their revenue as, looking at their the current trends out there. So if current trends hold, in other words, they think they're going to be doing mid to single digit revenue growth for full year 22. And I think they grew about 3.3% revenue, if I remember correctly, on the quarter. I was looking at the statement earlier this morning, guys. I think it was 3.3% from a year ago. So Target, the revenue growth is not crazy as expected. And they're struggling right now. Margins are down as expected. And let's see. I mean, if the economy gets better, I think Target will obviously benefit from that. But if things dwindle and get worse, they're probably gonna have to cut their outlook. But right now, they're maintaining the outlook, mid to single digits for revenue growth. So, yeah, Target is trying to break out of 185, and I called it out yesterday. I mean, it was kind of obvious. This was up 5% yesterday, or 4%. On the back of, what was it, Walmart's earnings or whatever earnings came out, Home Depot, and this ran up too. And I knew if the earnings were not good, this would easily sell off, give back all the gains. And I don't think we gave back all the gains, but we are selling off a good $6-7 from where we were yesterday at the high. So Target has come down a decent amount. It's still holding the 50 SMA though. It's still above the moving averages. But, it got rejected at 185, and now it's going to go probably back up to test it. So keep your eyes out on Target. Let's see. What's the other one? ZIM. Let's see what ZIM's up to. Last I checked, it was down 7%. Now it's down, 7%. Still 7%, guys. They did $11.07 EPS versus $12.84 estimated. So they missed on revenue of $3.43 bill versus $3.62. So another double miss. ZIM, Target, double miss. And it looks like ZIM, guys, I mentioned this on my morning video, looks like ZIM is putting in, I don't know if it put in the top, but if I had to guess, 91's the top on the stock, probably, if I had to guess. Because right now what I'm seeing is a head and shoulders, clear as day on the 3-year chart. Profits are starting to come down. Again, they missed on EPS. It's only a matter of time before they start cutting that dividend if they start getting a couple of quarters of, bad numbers, or if they just see bad numbers around the horizon. On the horizon? What do you guys think? This management team doesn't forecast things, or they don't know what's coming around in the next couple of quarters? Sure, they have no idea what's 10 years away, but in the next quarter or 2, 3, 4, they know things are going to probably slow down. So, if we see any signs of that and this falls through a key support of 35 to 40 bucks, the bottom could drop out on a stock like Zim. And I'm not trying to scare you guys. Who knows? I could be wrong, but I believe this could drop pretty quickly, right? We saw companies like Nordic American, what's that one called? NAT. Remember when oil went to zero, demand was down during the pandemic shutdowns, all the oil was stacked up on these tankers, guys. These stocks crushed it. That's how I see ZIM. It's a stock that is benefiting from a short-term issue that eventually profits are going to dwindle. They're going to come down. It's going to revert back to the mean. It's going to get back to normal. And a lot of people are going to lose money. But who knows? I could be wrong. I've been wrong in the past. Of course, we've all been wrong in the past. But I think I'm right on this. I don't know. What do you guys think? Let me know your thoughts down below in the comments. And another one that reported is Lowe's, ticker symbol LOW. This is up on the day in an overall red market, which is great. And now that I realize I'm looking at this, Lowe's is not even on my watch list. What the heck? Let me add that on there. There we go. So Lowe's is up on the day. On EPS, they reported 467 versus 462 estimated, so they beat. And revenue missed a little bit, by a little bit, 27.5 versus 28.14 billion. So mixed bag. At least they beat on EPS. That's a good sign. And last I checked, I didn't see anything on guidance. Let me double check though for you guys. Let's see here. It looks like there's a lot of buy ratings. Yeah, a bunch of buy ratings. Jeffries buy rating. Looks like they're raising the price targets. Yeah, that's always good to see in the short term. That's going to hype up a stock. So they beat EPS. We're getting all these buys, these price target raises, and I'm not seeing anything on guidance. Oh, wow. Same-store sales were down 0.3%. The estimate was up 2.1%. That is actually awful. I don't know why the stock's moving up on that. That is, I guess they were expecting that. I don't know. Oh, here's some guidance. They see full year 22 EPS at top end of $13.10 to $13.60 guidance. All right. And they see full year 22 sales at bottom end of 97 to 99 billion outlook. All right. So I guess, did they give that outlook previously? If they're reaffirming guidance, that could be a reason why the stock's moving on top of the buy alerts, or not the buy alerts, the buy ratings or whatever. You know what I mean? So what do you guys think about that? Lowe's, ZIM, Target. Let me know your thoughts down below in the comments and your thoughts on the overall markets. And if you enjoyed this video, hit the like button. Feel free to subscribe. Check out my Patreon and get your 10 stocks from Moomoo with a $100 deposit and your 12 stocks from Webull. All those are linked down below. Free money, guys, if you want some free money. And with that being said, cheers. I got some coffee. I got some water. I'll catch you guys in the next video. Good luck today for the rest of today. Hope you guys do have a great day. Peace out.